Hello everybody and welcome to the Anita Posh Show, a Bitcoin-only podcast. My guest today is Adam Back, the inventor of Hashcash, a mining mechanism that was or has been used in Bitcoin mining as proof of work. His work is cited in the Bitcoin whitepaper and in the Tor whitepaper. Adam is a seasoned cryptographer with a PhD in computer science and distributed systems. As co-founder and CEO of Blockstream, he is building the infrastructure for the Internet of the future. Before we start the interview, a short message about my book and from my sponsors, and then enjoy.
Learn Bitcoin will teach you the why and how to use Bitcoin. The masterful flow from one subject area to the next makes Bitcoin seem simple to explain. Michael Peterson, Bitcoin Beach, El Salvador. Order your copy now at learnbitcoin.link. That's learnbitcoin.link.
Did you know that in the US alone, there's $15 billion worth of gift cards that don't get used every year? According to a recent poll by Bankrate, over 50% of American adults forget to use their gift cards, vouchers, and store credits. We've all been there. We get a gift card for a special occasion, tuck it away in a drawer, and totally forget it's there. It's time to do something with those gift cards. A good place to start is to trade them in for some crypto. On Paxful, you have nearly 400 ways to pay for your Bitcoin, including a wide variety of gift cards. Don't let those cards go to waste. Trade them today on Paxful. Go to anita.link/Paxful to trade your cards for Bitcoin today. That's anita.link/Paxful. Living on crypto is easier than you think with Bitrefill. Choose from over 4,000 gift cards and mobile top-up options from around the world. I used Bitrefill to top up my phone when I was visiting Zimbabwe. It was easy, worked like a charm, and I even earned sats back. Pay with Bitcoin, Lightning, Ethereum, Dash, Tether over Tron, and many more options. No account is necessary. Join the thousands of users around the world who are living on crypto today using Bitrefill. Join now at bitrefill.com and start earning sats back with each purchase. That's bitrefill.com. Hello, Adam. Adam Back. Welcome to the Anita Posh Show. I'm very honored to have you on.
Thanks for having me on.
It's the second time. We did that live in person in 2019 at the Understanding Bitcoin conference in Malta. For people who are interested in that conversation, it's episode 12 of my podcast. And it's quite interesting because there we're talking about Hashcash, the cypherpunks, reclaiming privacy and things like that. So today I would like to talk a little bit more about recent developments. So you're the CEO and co-founder of Blockstream, which was founded in 2014 already. And recently you secured another $210 million for funding. And your company is now valued at $3.2 billion. It seems to me that Blockstream always has had a holistic approach in setting up projects and products around Bitcoin. It's now around 15, I counted on your website, and they all seem to integrate with each other. And I'm in a way under the impression that you had this idea or vision maybe even earlier than 2014 when you founded Blockstream with your co-founders. Can you please tell us a little bit about this vision that you already had back then and which kind of big projects are still missing?
Right. Well, I mean, the building a miner is definitely one of the the more recent things we're getting involved with, and we announced as part of the fundraising the acquisition of Spondoolies, an Israeli founded ASIC and mining manufacturing company of some years. So in terms of the sort of full stack approach where we go down to the physical layer with different hardware, initially hardware wallets, HSMs to sign blocks in a liquid network, and the low-level networking like Lightning, satellite communications for Bitcoin data, and the Liquid network as a kind of network, and then wallets and block explorers and services on top of that. And I guess Liquid AMP also a sort of middleware feature for Liquid to support securities tokens. So actually we had this kind of full stack concept already in the initial pitch for investment in 2014, which is that we figured it would be useful and strategically important for each, for what we were doing to build sidechains that the main Bitcoin network would be decentralized. And so one way to do that is to participate in mining yourself. So do some mining. So if all companies involved in Bitcoin, like exchanges and payment processors and individuals with some Bitcoin investments, put maybe 1% or less as compared to the Bitcoin holding into mining activities, it would be much more decentralized, and you would have a small stake in the decentralization and security of the network that your business or your savings rely on. So that was our concept, and we already started some mining activities in 2015, and built out more hosting. We did some mining for ourselves and at the company level, and also mining for investors, so third parties, individuals, funds. So now we have some, but not all the customers are public because it's up to them if they want to disclose they're using our service. But Fidelity, Digital Asset has their miners with us, and Galaxy and some other funds that haven't announced that. So, and also, of course, we want to bring things closer to users so users can participate, and that's where the Blockstream mining node comes in. So it's a liquid security token. It gives you something similar to a fractional ownership of one of the enterprise contracts for mining. And there are two thresholds. One is still quite large, which is the primary offering, which was in March this year. There's another one in June, and then the product started mining in July. And the primary offering minimum investment was 200,000 euros. It's to do with European securities regulations because it's a Luxembourg securitization vehicle is the way the investor interfaces with it. But on the secondary market, so OTC or on exchange, it then becomes possible to transfer 0.01 of a note, so down to 2,000 euros at the initial price. And so midterm there should be exchange listings as well, and exchanges may let you transfer or buy in smaller increments as well for because people will want to place orders for not precise amounts, but for sort of a particular dollar amount, let's say. So probably it will go below 0.01, but 0.01 is the regulatory kind of OTC transferability threshold. So there's some sort of mixture between technology and regulations.
Okay, so basically you want to enable people who don't have like 200,000 euros at hand to also be a part of Bitcoin mining through buying shares. Do I understand that right?
Yeah, I mean, it's a security interest, and I mean, it's not a share in Blockstream. It's more like a financial instrument. And so the behavior is that the performance of the machines is in a class. So all of the machines in the Blockstream mining node are, if there's eventually some failure rate, the first 10% of failure rate we replace as part of the proposal. So we have extra machines and we replace them if they fail. But if the failures fall below 10%, that is averaged between users. So, if you do it yourself in a garage or in a more direct hosting company where you own specific machines, and you have 3 machines and 1 machine fails and it takes a month or 2 to repair, of course that's not good for you. But if you're kind of part of a pool of investors like this with thousands and thousands of machines, then if one fails, it's less impact percentage-wise.
But it's a bit weird because as I understand it, on the one hand, it centralizes Bitcoin mining because Blockstream is providing the mining and these nodes. And on the other hand, you say it's decentralizing the access to mining. How is this correlating?
Yeah, so I mean, I guess decentralization has to start somewhere. So it's, at least our way of thinking is that we want to provide users with more kind of hands-on experiences. So for example, there's some more technology development, some new pool protocols. And as they come online, we'd like to allow owners of a Blockstream mining node token to run a full node and, contribute transaction selection. So that would be a bit like, you can run the node and, legally, contractually, you have the right to input transactions and select transactions, where today the mining pools choose that. And, in a hosting environment, that's about all you can do, right? And so it kind of takes part of the intelligence and gives it to the user, which is the policy decision about which transactions go in a block. And that's one area that's even more centralized today. There are only maybe 20 or so pools. It's difficult to start a new pool because it's kind of a protocol limitation that as a pool, if you have too low of a hash rate, you don't offer good variance reduction, and that's why people use a pool. So there may be only space in the world for 10, 20 mining pools at the moment. And so these new protocols, which we did some of the R&D for, some years ago, is the Open Hash protocol. And the same idea is being developed now under the name Better Hash or Stratum v2. So it's all the same concept, which is basically the miner should be able to run a full node, even if they're a small miner, and the pool shouldn't be deciding which transactions go in a block.
Mm-hmm. I guess since you just mentioned the combination of mining and nodes, I guess the new project called Greenlight, which is offering an easy access to a full node, is also interacting with this idea?
Yeah, so I mean, and to complete the mining topic, of course, if you have reasonable cost of power and you can run some mining in your garage, that's even better because now you have physical control of the machine. Otherwise, you only have kind of contractual control of the machine, which is not as good, even though you have configurability for the node. So Greenlight is a kind of way to, it's a kind of light lightning protocol model. So today there are mainly two types of Lightning wallet experience. One is hosted, where you may have a smartphone wallet, but really all of the Lightning channels are managed by a provider online. Their nodes are online. You may even have fractional ownership of the balance in a channel. So maybe the channels are even shared between users. And the reason they do that is it's much easier. It gives you a faster experience, and it's easier for them to balance channels because they're shared. They can have fewer big channels kind of thing. And the other model is you run a full node and you configure your smartphone wallet to connect to it, and then you have a more self-determination. And even running the Lightning node has some bandwidth overhead for the gossip information. So if you do, and you can run a full node on a phone with enough storage. So Blockstream chief architect Lawrence Nahum has a kind of personal project, which is a full node, like a Bitcoin core node that's been retargeted to Android. So you can run it on a smartphone in pruned or full node and configure localhost connection in a Lightning wallet that can do that. And so you've got the gossip information as well. So it's the same kind of trade-off. And so what we thought is there'd be an interesting possibility to offer a kind of SPV Lightning wallet or a lighter Lightning protocol profile. And that's what Greenlight does. So it can host the Lightning node for you, but give you the keys for it. So at setup, you generate the keys locally. It's a sort of server-assisted model. So the server has the gossip information, monitors the reliability of routes, and the connectivity, the discussion between the client and the sort of cloud-hosted Lightning node is less bandwidth, less interaction, less bandwidth than running a full Lightning node on a smartphone, because you don't receive the gossip information, you're not probing the network, you're just, deciding to send a transaction or being notified you received a transaction, and your wallet is signing with the keys. So it gets most of the security of running your own node, better latency and performance, but it's not quite as good privacy because the hosted node knows some things. And we also have the ability to kind of onboard and offboard it. So, if you want to bring your channels, move your channels from the cloud into a local node, or move them from a local node into the cloud, you can migrate them. So it has a kind of onboarding path. So one way to look at this is, it's a fast way for somebody to set up. They can, install a Lightning wallet and get going and learn some things, and then later import their profile. And the keys never left their device, unlike the fully hosted model.
So is there also a possibility to consolidate more Lightning wallets? I mean, I have several Lightning wallets on my smartphone, which are non-custodial. And could I import it or onboard it into Greenlight, consolidate them, and then offboard it again on my own full node, on my Raspberry Blitz?
The channels are still individual channels. It does add a different possibility, which is for you to have multiple wallets sharing the same node. I guess you could probably do that with some of the wallets that support external node. So it has that kind of possibility as well. But to consolidate channels, I think you really need to, close some and create some bigger ones or import them. There is not perfect transportability between different Lightning implementations as well. And it's a little complicated because their database is different and their sort of channel management information is slightly different strategies. So it's not trivial for them to, import from Eclair to C Lightning or Lightning Labs and vice versa.
Okay, understand. I would like to go back a little bit because as the inventor of Hashcash, which is being used as proof of work mining method in Bitcoin, I mean, we all are bored about this energy consumption debate on mainstream media. I know that, but I really would still like to understand, to also have better arguments myself, what proof of work now really solves, because it solves more problems than just creating new Bitcoin in a decentralized manner. Can you maybe explain what proof of work also does?
Yeah, I mean, it has multiple functions in Bitcoin. Apart from being sort of virtual gold mining to make a decentralized way for anybody to mine coins, it also solves a difficult computer science problem about coordination in a distributed system. So in a way, it enables a permissionless network with anonymous participants. Without that, the previous coordination protocols, the Byzantine generals problem being a kind of formal description of this coordination problem, required identified participants. And of course, in a permissionless network, there's nobody to assign identities. And so somebody that joins the network could, pretend to have 1 million identities if there was some advantage. So the proof of work is sort of saying that you can, have a tiebreaker influence as to which block of transactions gets processed first, proportional to the amount of CPU or ASIC hash power you have. So it solves that kind of race condition in a probabilistic way, which was a new innovation for Bitcoin, I think. And then there's also the kind of economic aspect that in systems with federations or monetary policy boards, whether that is centralized cryptocurrencies that have a collection of managers and a CEO, or fiat currencies with monetary policy committees, they have permissions. They can potentially undo transactions. With proof of work, there's an actual cost, an unavoidable cost to undoing something, and there's an economic incentive to be an honest participant in the network. And so I think it might be the case. I mean, economics and game theory are kind of there's some mathematical component, but there's also some kind of human behavior component. So it seems to me that it may be a necessary requirement for a commodity money that there is a physical production cost with an investment, with some kind of investment, electricity, hardware, gold mining equipment. Because if there is no actual cost and it's down to human policy, then there comes the usual political problems of lobbying, people with close ties to the government, and the so-called Cantillon effect, where people with, privileged relationships with power brokers in government can get cheaper money or get inflated, like newly created money, faster before the inflation effects are felt by the rest of society.
So as far as I understand, this would happen or happens or can happen in proof-of-stake systems. Is that right? Because people basically stake money and with that they vote on the transactions?
Yeah, I mean, I think of proof-of-stake as more like shareholding in a company. You can buy more shares and get more votes. So it's almost worse than political money or certainly related to it, in the sense that there's a mechanical way for you to buy influence. Whereas, there should be some friction or limits on buying influence in politics, imperfect though it is. And in a company, there are rules, like governance rules and so on, but you can ultimately stage a hostile takeover of a company. If you accumulate enough shares, you could force a public market company to go private, or change something about the company strategy potentially. So proof of stake has that kind of thing going on, and it's not just theoretical. I mean, there have been proof of stake systems that have been acquired by other companies, and then some kind of power struggle between the users and the new owner, and various kind of hacks that relate to sort of renting, flash borrowing to accumulate a lot of influence, things like that. So they're not entirely theoretical. They've also happened in the wild. So it does import, many of the problems of the kind of corporate governance, public share companies, or government managed currencies.
But many people also then say, why is there no cap like in the mining difficulty? Because the more miners start mining, the higher the mining difficulty goes, and as far as they understand, more energy is used and wasted because it might not need to be this highly secure. Like the security grade could be a little lower and we could save some energy. What do you think about that argument?
I mean, there are a few different ways to look at that. One argument is, people who don't value Bitcoin because, it's not philosophically for them. They like, government controlled money. Then they're not going to like anything about Bitcoin. So if Bitcoin uses power, if it uses servers, if people invest in it, it's all, displeasing to them. So they're not going to like anything about it, however it works. So, and I think the other thing is that the power used by Bitcoin is it tries to find the cheapest power for economical reasons, and that is often green power or stranded power. And there's a lot of unused green power in the world. The Quebec province of Canada has unused hydropower, basically, that is 2 times more than the entire Bitcoin network. So, that province could run the entire Bitcoin network and have spare capacity left over. and it's not being used at the moment. It's just, it's excess capacity, so they just pour it downstream, basically. And there are other areas in the world with lots of power. So I think that it's, that's one aspect. The other aspect is a lot of power is actually wasted because some power generation methods take a time delay to start and stop, and yet the industrial and consumer use is very real time, and so the excess power has to go somewhere. If you can't turn it off very quickly, you have to use it, or it will break the equipment, or damage pieces of the grid infrastructure, and so they end up paying load balancing companies to negative energy rates to get rid of the power, which basically means heating the environment with multi-megawatt heaters outside or something like that. So these kind of load balancing uses, Bitcoin can actually make the grid more efficient. And I think if you ultimately are able to make something more efficient by if somebody so we started a project with Square, the payments company, to make a solar farm where buying excess power using Bitcoin mining is part of the economic model, and we want to show and prove by publishing the the cost inputs and the profitability over some time that this actually works in practice, which is we've certainly seen other solar projects approach us and use a power purchase agreement from Blockstream to help them get project financing. And people look at things from a policy perspective, but out in the world, most things are governed by economic viability. And so, to achieve project financing, the investment bank or financier wants to be convinced that you can pay the money back. And so you need a business case. And if your business case starts with, well, we'll build the power and we're not sure if we can sell it all, that impacts your viability, and maybe you can't get financing. And another factor for new power projects is the grid management is quite bureaucratic and government influenced. So it can take, a year or so to even get connected to the grid once you've built the infrastructure. And so Bitcoin can solve, both of those problems, which is it can use excess power and it can use power off grid until you have a grid connection. So if that reduces the cost, then through competition from different power producers, it should result in, a more robust grid with more power and ultimately lower cost and greener power.
I guess that's where your Blockstream Energy project is coming in. You're also building stuff here, but first, two questions. Is it possible to easily shut down and power on Bitcoin miners? Like, for instance, if there is excess energy, you turn it on. If there's none, you turn it off again?
Yeah, you can reduce their speed while leaving them on, and you can also power them off or put them on standby. I mean, like all, computers, they don't like to be completely power cycled. That can shorten their life if you do it a lot. But there is a big difference between standby power consumption and, their variable speed, so you can run them faster or slower.
Mm-hmm. Interesting. And also one question is, how fast does the internet have to be in the area where you are mining so that you can send new mined blocks or the solutions to the internet so that they get into the Bitcoin network?
Well, I mean, low latency is good, but actually if you use a remote pool and you use a stratum proxy, so you make the mining farm look like a single big miner. So there's, if you run each individual miner inside a containerized mini data center, that will result in a lot of bandwidth and a lot of small work. But if you run a local proxy in it, then it just looks like a single large miner, and you don't have to send so much data. And so we also have the ability to do the mining completely over satellite. So that means, we have used that where there is internet to have a backup connection. So we've run mining farms on bidirectional satellite as a failover plan, but you can also do it exclusively over it. Now, you do have a little bit of latency, but if that enables you to operate a mining farm in somewhere that's very low cost because it's remote, that can make economic sense too.
Mm-hmm. Yeah, great. So the Blockstream Energy Project, what is it? What are you building there?
Yeah, so we have a mining farm in an area, like a rural area near Atlanta in the US, and that one is using this containerized model. And so with the mining product, with the energy product, we're using a low maintenance variant of that equipment. And the idea is, the proposal for the buyer is that somebody with a new energy product or an existing energy provider can buy or lease this equipment, and we will give them in exchange a power purchase agreement where we will buy, as much or as little power within some parameters as they have spare. And the power might be intermittent too, if it's solar or wind, that could be subject to weather or day or night time. And, usually if people are mining from scratch, it can be difficult to make profitability with intermittent power, something that's only powered in the daytime, because you have to recoup the equipment cost. But because we sell the power produced of the equipment, we can pay a higher rate for the power because we pay them in dollars and we keep the coins that are mined. So we're willing to pay a higher power rate if they're covering the miner depreciation. And from their perspective, they're selling the power, all the power they have, they sell it to the grid for industrial or residential uses when there's demand, and when there's not demand, they sell it to us. So from their perspective, they sold the power and they have a standby power consumer, so they can get to 100% utilization of what they have, and that will make them profitable. So whether or not they actually ran the miners at 50% or 90%, it doesn't really concern them because they're looking at the overall business and being able to predictably sell all the power they have.
Mm-hmm. So basically, you're helping that excess energy is not lost but used for Bitcoin mining, and you can do that in decentralized places too.
Right. I mean, if with some kinds of power, they have to pay people to get rid of the power. So us paying them instead is an interesting, attractive proposition for them. And other projects, you just have to bypass it. So you close the gates on a hydro dam, or you shut off a wind farm, or just disconnect it so the blades spin, or switch off the solar. So it just makes things more profitable overall.
And you touched Blockstream's satellites before. It seems as if Blockstream is building all the infrastructure that you yourself use for your products and open it to the world, which is great. So the Blockstream satellites, as far as I understand, are now working bidirectional already, or is this only a private functionality that you as Blockstream are using?
Yeah, so the main service you can get, so you can buy from our website something called the base station. It's like a satellite base station. So it's a newer type of satellite dish, which is all digital. So you run it from power over Ethernet. So it's much more zero configuration. You just plug it in, there's one wire, it's power over Ethernet, that powers it. The digital processing happens with accelerated hardware inside the dish itself. And those dishes are a little easier to point because they're phased array, kind of rectangular dish. So that's used for satellite TV as well, but it's a more modern standard. So there's still a lot of analog equipment. And we can work on the analog dishes as well, but this is a kind of easier setup. And that equipment is single direction, so it can receive only. And we're sending a lot of different things over the satellite. In the most recent update, it has full block history, so you can sync a full node from scratch over a couple of weeks. And you can reduce the time to sync if you have two dishes, if you're in an area with coverage from two different satellites. And it's broadcasting the transactions and blocks in real time. And more recently, also the Lightning gossip data and updates to that. so you can reduce the kind of internet bandwidth needed to run a Lightning node. So, you still need an internet connection, but if that's expensive where you are, or it's on a 2.5G mobile tether or something, you won't use a lot of bandwidth because you get the bulk from the satellite. And so that's single directional, and but we are using a kind of internal beta of a bidirectional. So we would like to bring that to market. The equipment is a bit more expensive, so we'll have to put together a price plan that covers the equipment and the service and enables us to scale it. But it's quite interesting. It can be used for generic bidirectional internet, and Bitcoin paid global basis will be quite a new, interesting service maybe to Bitcoin businesses or individuals.
Yeah, and it's a great opportunity in remote places, as you said, if internet is expensive or unreliable as a backup, which is, in most parts of the world, actually. We are just here in Europe or in the US. We live like very comfy and we have all that, and we always forget that the rest of the world doesn't have it yet. So I always hear also that Starlink, the satellite project by not Tesla, but Elon Musk, will bring internet to all of the world. Do you know anything about that? Is this, do they maybe also want to send the Bitcoin blockchain down to Earth, or what's your view on this project?
Yeah, well, improving global internet access and connectivity is a great thing. So, as they roll it out, that will, I think, help. I think it's part of the kind of economic fabric of the world. Having high-speed network access can improve economic conditions and financial opportunities to, do certain types of services and work online and get access and learn, use it as a learning resource as well. So that's great. I think there's some differences with the Blockstream satellite architecture from Starlink. So Starlink is many thousands of low Earth orbit satellites, and it's also a subscriber. It's a routed network, so it's not. It's broadcast from the individual microsatellite that you connect to, and it's changing as they they're not stationary, right? But it's not a global broadcast network. So and it's you need a subscription, so you're going to provide. You won't be able to use it anonymously, let's say, to receive things, and it's not configured or set up to broadcast a shared stream globally, where the Bitcoin satellite is. So it's broadcasting, the same data stream globally, and actually different error correction streams for the same data stream from satellites in overlapping areas. And that's so that if you can run two dishes in an overlap, the error correction streams are usable and provide more data. So it's not the same data twice. It's a different twist of the same data. So if you get both of them, you can get the history faster.
Yeah, and that's true. If it's subscription based and it's not that private, yeah. So let's switch topics a little bit more. As a technologist and cryptographer, I guess you also spend some time on evaluating other blockchains or altcoins. What are interesting technologies in other blockchains that might be implemented in Bitcoin in the future, maybe?
Yeah, I think that there are, three sources of innovation that may work its way toward Bitcoin. One is kind of Bitcoin-related R&D. So people are involved in Bitcoin on the R&D side are looking ahead at the next thing. And so, for example, the Schnorr signature was something that was talked about since 2013, and then we implemented the first version of it in the Liquid network, in Elements, the open source platform behind the Liquid network. And so there is a kind of path from R&D to Liquid as a sidechain that can try experimental or new things earlier, and then later, I think it helps people to get confidence and experience with something to improve it, or have confidence that it should work, to see it used in a live system with live money. And so, Elements and Liquid provide that. So that's one path, and 2 or 3 different Bitcoin-related things have been in Liquid or Elements before in Bitcoin. So that's the kind of Bitcoin R&D input. Another input is the blue sky, so academic, mathematical cryptographers and papers. And so you see some ideas coming out of that being adopted by cryptocurrency. I mean, one exciting area being this whole area of signatures of execution or different variants of snarks. So we actually, collaborate with some of the academics and in some way maybe seeded some of that research, because confidential transactions, which we use in Liquid, use zero-knowledge proofs and a very optimized zero-knowledge proof. And then we collaborated with Dan Bonnet and Benedict Bunz and others on, we posed the question to them, do you have any ideas of how to optimize this further? And what they came up with to optimize it further was both a way to optimize it further and a whole generic signature of execution, so something more powerful and generic. So we have implemented and we'll probably bring into Liquid some of the bulletproof technology to make the confidential transactions smaller. And then there's some crossover where some of the Bitcoin technology ends up in altcoins first, and so the bulletproofs have been used, and confidential transactions and Mimblewimble, this kind of anonymously published paper, uses the building block inside confidential transactions for a slightly different purpose. And so, all of those things were adopted by Monero, Bitcoin, and related altcoins, which is they use Mimblewimble, which is based on the range proof in confidential transactions. They adopted bulletproofs, which we worked on. And, that particular family of altcoins also has an interesting linkable ring signature mechanism, which is some innovation in itself. And coincidentally, I had proposed a way to, on a Bitcoin talk forum, to reduce their ring signature size by 50%, just a kind of optimization. So they actually implemented that. And then there are also, other altcoins that deploy or add innovations on top of academic things like, snark-based privacy coins, and there are a few of those. There were protocols called Zero Cash and Zero Coin, which were different, one using snarks and one using conventional zero-knowledge proofs. I think there are coins for both of those. So I think, sometimes when things get into, to get adopted by Bitcoin, they have to generally reach more robust security confidence level, because certainly some of the altcoins that have used confidentiality zero-knowledge proofs have actually had accidents where they narrowly avoided having uncontrolled inflation, or in some cases actually, a disclosure wasn't handled very well. One coin fixed it and another didn't, and so now there's some inflation inside it, and I guess we don't know how much. So there can be risks in very new technology. So I think Bitcoin likes to use proven technology or do more testing first.
But we also had an inflation bug in, I think, 2010 or 2013. Where's the difference here? Is it also because Bitcoin was basically a baby back then?
Yeah, I think that bug was, the defect rate has gone down in Bitcoin over time as some simple bugs were fixed early. And I think that was in that category. There was another kind of bug more recently that was, fixed in Bitcoin without being discovered in a wider space. And I think one difference for Bitcoin as is that because it's not encrypted, it's not involving zero-knowledge proofs or privacy encrypted values, the inflation is discoverable. like if it were to happen, it would be visible and you'd know how much and you'd know which coins had it. Where I think with one of the Monero variants, it was exploited and probably the coins are indistinguishable. So, you can fix it forwards, but there's not much you can do about it backwards.
But are you actually also like researching or looking into other altcoins? Like I say just a few names, Cardano, Tron, EOS, or something like that. What are the reasons that you're completely maybe uninterested in them?
Well, I think that there's a distinction between the, economic belief and the technical potential. So, and of course, one challenge is there are so many altcoins. There are 10,000 of them, maybe 100 with, different potentially interesting things, and people run out of hours per day to read things. So that's a problem, and a lot of it is, it's trying to market itself. So you have to first of all discover the real story and not the marketing story, which takes effort. But certainly, smart contracting is interesting. And there are there are lots of clones of other chains, but there are also chains with different program models or, more formal ways of doing things. So, I think that kind of area is interesting. And at Blockstream, we have another smart contracting system called Simplicity, which is based on formal logic. So that's actually something originally discussed on Bitcoin IRC, I think in 2012 or thereabouts. And so we've been working on it, making it a reality for Bitcoin and Liquid. So we have several developer releases in the last few years, which provide a branch of the Bitcoin code base and a Liquid code base with extended for Simplicity smart contracts. So I think the hope there is that it could be a way for Bitcoin to do ossification while being self-extensible, because Simplicity is a way to, it's a very low-level language and it's formal logic based. So at the lowest level, there are 9 kind of logical operators. And so it's designed to make it straightforward to input it into a logic proof system and to make proofs about program, function behavior, and to make a predicate and say, well, the only way that coins in this contract can be spent is this condition, and then be able to prove that. So to give an example, the Simplicity interpreter is written in its own language, which is formal proof compatible. And so we have a proof that the Simplicity interpreter itself will correctly execute all Simplicity programs, which is a quite strong claim, where most smart contracting systems in the cryptocurrency space in general don't have anything like that. And so that's something we're aiming to bring into Liquid within the next quarters.
Mm-hmm. Very interesting, yeah. So you're using Liquid basically also a little bit as a test bed for Bitcoin innovations.
Right, yeah. I mean, I think, you can think of Liquid as a layer 2. Well, more people are familiar with Lightning, but Liquid is another layer 2. And one aspect of Lightning is a way to make, to improve some parts of Bitcoin with a security trade-off. But ultimately, Lightning can be faster and cheaper and more scalable, but it can't generally add features that are not available in the underlying chain, because its smart contracting is using Bitcoin altcodes, and ultimately every Lightning transaction is a Bitcoin transaction that the game theory is set up that you don't have to send it to the chain. And with Liquid, because it's a sidechain layer 2, you can actually add new features to the base layer. And so then you have things like confidential transactions, some smart contracting extensions, and midterm Simplicity, which gives a lot more flexibility for contracting, and a different security model with a federated HSM block signer model. So it gives faster transactions, confidential transactions, and multiple asset support so that you can, atomically transact dollars for Bitcoin and things like that.
Thank you for that. So do you see actually any reasons anymore that are really a danger for Bitcoin? I mean, now it has grown that much in the last 11, 12 years. I understand that big companies or billionaires who are holding a lot of private keys, they could be a problem for consensus finding. And on the other hand, I would like to know what you think about big investment companies like BlackRock that are now investing in Bitcoin. I mean, the idea was to have no intermediaries and things like that. Is this gone, or is the dream still alive?
Yeah, I mean, I think it's important that a reasonable amount of Bitcoin is held by people with their own private keys, or if they don't have the private keys, at least, some clear legal rights, because you saw a precursor of a potential problem with exchange rules about, when there was the different forks proposed in Bitcoin, they put forward a draft proposal of how they would handle the fork, and some of those policies were quite risky or dangerous and maybe attackable. Like somebody could short something and then rent hash rate or something like that and make money. So they weren't that well thought out. And I think there's a risk if too much Bitcoin ends up in ETF-like products or funds where the fund manager may feel they have a fiduciary responsibility to do something that the actual Bitcoin users wouldn't like. So I think, the conclusion of the last fork drama was that, which is a few years ago now, was that basically the market prevailed. It was dramatic, but ultimately, because the users own most of the coins and the miners can have opinions, but ultimately have to follow the market for economic reasons, the market prevailed. So, if too much, if 75, 80, 90% is in ETFs, that could be a problem because the ETF managers might pull in one direction, and then it will test, people's resolve to remove their coins from there to impose their own policy views, let's say. So I think it'd be smoother if, a good proportion is in the hands of actual users. And it doesn't mean they have to necessarily have full responsibility for key management, because that could be risky to make a backup failure. But at least if it's kind of multi-sig arrangement, then that works.
I think that's something that Andreas Antonopoulos is calling a social backup. So where more people can help you secure your keys, and also if you lose it, you still have a backup.
Yeah, I mean, that's one way. And with the Green wallet, we have a kind of time lock option. So today it's set up so that there's a server with a second signature, which is a kind of security provider, and it won't co-sign the transaction unless you successfully pass a two-factor authentication. And the concept with the multi-sig arrangement in Green is that there's a two-factor authentication server. The coins are held in a 2 of 2. You have one of the keys, the server has the other key, and the server is the security provider and won't co-sign unless you pass the two-factor authentication. Now, of course, that raises the risk that you lose the two-factor authentication, or that the service provider is ordered to not cooperate with you in signing your transaction, or the service provider goes out of business. And so what we do to avoid that becoming a risk on both fronts is there's a timeout. So after 3 months, 6 months, 9 months, if you lose that authentication, you can then, the smart contract says you can switch and do it with a single sig. So that's a way to kind of get a security service and still have control after a time. And you could use that same mechanism for different things, so that, for example, you have control, but if you lose your keys completely, then after a year, a custodian can, move the coins and help you reestablish control. So you can have sort of hybrids. So I think it would be beneficial if ETF-like products had such a key arrangement, because it would mean that, the user has to agree if there's a policy change. They have to, transact to move the coins.
That's interesting solution. And do you see that coming? I mean, are more people talking about that? Also, like the ETF managers, do they want that or not?
Well, I think, people tend to do what's simplest, and what's simplest is full custody. So, that's partly why we're involved in the, creating new financial products, and acquired the Admant hedge fund and issued the Blockstream mining note, which is we can bring financial products to market which are, have the normal security interest and a Luxembourg securitization vehicle around them, while still providing native blockchain, making use of the native blockchain technology to preserve user control and involvement.
Yeah, sounds great. I mean, it's you're having a vision and you're executing on it, which is really great. So, guessing from your tweets, I think you're also a little bit a trader yourself. I don't know what you're trading, but maybe you have a recommendation or something. If somebody like me or listeners, let's say one owns one Bitcoin or half a Bitcoin or something like that, how can I actually make more of my Bitcoin through trading or other things? I mean, just waiting and hodling is also a good strategy, but maybe there are other ways that I don't know.
Yeah, I mean, that's where the hodl meme came from, basically. That, if you read the original post, this fellow decided from experience that it was safer and better to just hold. So I think that, if people are interested to trade for, if they enjoy that or they want to try some strategies, my suggestion is to, hold 90% of the coins in cold storage and then trade with 10%, because then the worst that can happen is you can lose 10% of your coins. Because trading is, it can be high risk, and nobody really knows what's going to happen with the price. And certainly trading with leverage, which some platforms allow, greatly magnifies the risk. So you could have the confidence that the price is going to go up with a leveraged trade, but be forced, be liquidated anyway. So you could basically turn a good trade bad by being too leveraged. So leveraged products are dangerous. I think something that might be interesting for some people is the long-term Bitcoin options, where you can sort of sell now an option to buy the Bitcoin from you at, let's say, $100,000 by the end of 2021. And there's a market price for that. So it gives you some money now. And the downside is you give somebody else, if the price is over 100,000 at the end of the year, you give somebody else the Bitcoin upside, or part of the Bitcoin above that price. And so it's a little bit like getting paid now to put a limit order where it will automatically sell on the 31st of December if that price is reached. So if you would be philosophically okay with selling some coins at that price, it's kind of an interesting trade. So there are a few platforms offering that kind of thing, but you have to, of course, with any trading, you have typically some custody risk, so you have to evaluate that. There are also some yield products that produce, a return on Bitcoin, but again, there's typically custody risk. Most of the Bitcoin yield products are actually relending Bitcoin to hedge funds to do, riskier things, or are actually placing the Bitcoin in DeFi products that may have a failure risk. So there's no reward without risk, and holding is safe. That's my view.
Yeah, it's also my view. I mean, I don't trade anything because that's too much risk, and I just bet on the upside of Bitcoin and hold the keys, and that's it. And I mean, every action, every trade induces like work also and time, where I could, and also it doxes myself. Like, I mean, those products I have to KYC, and I think it's enough to be KYC'd like with one or two maybe Bitcoin exchanges if you want to buy. And I mean, the last month or something, I tried BISC for the first time, which is a decentralized Bitcoin peer-to-peer platform, and it worked great. So I think in the future we will see more decentralized exchanges, right?
Yeah, I mean, there's a couple of things on Liquid as well, because it has stablecoins on it, and so there are kind of trustless swaps. So one interesting platform is SideSwap, which is an Android and iOS wallet where you can trade with other users Bitcoin for dollars, without a sort of formal account setup. You can just put assets in there, place an offer, and it will swap, and it's trustless, so there's no kind of custody risk from a third party. I guess another type of investment some people get interested in is mining. So now, I mean, mining itself has, technical risk, particularly like equipment failure risk, or if if your power rate is high, it could be a disadvantage. But, we've been doing some mining at Blockstream at the company level. And so we did some back testing to see how it behaved. And so I think, generally it provides some downside protection, but it's still a Bitcoin correlated investment. And historically, it looked to be providing about 60% of the upside participation. So on average, right? So if you are, I don't know, I mean, there are different reasons to buy it. It's kind of diversification, risk reduction, because Bitcoin itself is volatile, right? Without being, completely out of Bitcoin. So some people put a small portion into mining, for example.
Yeah, interesting. And there are more and more mining products coming up. As you said yourself, like with your Blockstream mining, you're building miners now too, right?
Right. Yeah, that's coming next year. So with the acquisition of Spondoolies, we are building, a new mining line of products, and one differentiator for that product is to have a more international supply chain and manufacturing. So a lot of the mining products, the boards and the assembly is done in China, just historically. And so, we'd like, part of our plan is to decentralize that a bit and do it in some other countries.
Great. I have one question. What's that on the side, on the board? What did you calculate there, if you want to disclose?
Yeah, it's just some attempt to... So with confidential transactions and arrange proofs, one of the kind of bottlenecks to adoption is the size. So, there've been attempts over the years to mathematically find more compact ways to make the range proof, and it's improved. There are different versions. So Greg Maxwell got to, I think, 2.5 kilobytes for 32-bit range proof, and then there was an optimization to get it down to 2 kilobytes, and the bulletproofs brings it down to about 600 bytes. And so this is my spare time to try and find a more compact way. One downside of the bulletproof approach is there are two versions of the range proof. One is El-Gamal commitments, and the other one is Pedersen commitments. And the Pedersen commitment, which is what we use in Liquid, has the risk that a quantum supercomputer very far in the future could create inflation, but your privacy would be protected for indefinitely with a mathematical guarantee. And the other variant, the El-Gamal variant, it's there's a mathematical, you can see it due to something simple like simultaneous equations, that it's not possible to create inflation mathematically. But then the quantum supercomputer very far in the future would be able to remove the privacy, so you'd be back to today's kind of privacy model. So I'm interested to find a way that has that no inflation guarantee, that's more compact, because the most compact versions don't have that guarantee. So, and it's just, if I can find a way to do it and get some peer review and other people are interested in this too, then maybe it's something that could be used in Liquid or Bitcoin in the future to provide, a more compact transaction. The Bitcoin block space is scarce, so having 2 kilobytes per transaction is quite expensive when a transaction is typically a few hundred kilobytes today, right?
Yeah, exciting that you're still researching and innovating and hopefully inventing new stuff all the time. And at the same time, you're the CEO of such a highly valued company. Well done, I have to say. So let's close that with a view on the future of Bitcoin and of Blockstream. What are you going to use this $210 million for, and what is on the horizon for Blockstream in the next years? And as a closing word, maybe what's the vision for you about Bitcoin, and how far have we come in the first 12 years?
Yeah, I mean, in terms of use of capital, there are lots of growth opportunities for us. Liquid adoption is growing. We want to accelerate some of the technology development around there and enable all of the third-party developers and startups building on that technology to get all the features they need to make interesting applications. And in the mining space, we do some mining for ourselves, so we can grow that. And we also have to grow the hosting capability. So, the megawatts of hosting capacity we have to support people that host with us and to grow the Blockstream mining nodes. So the funding is used in a few different areas, and also in the R&D and manufacturing for the miner is another use of capital. So it's spread across different product lines. And some people noticed that we hadn't done a fundraise for, I think it's 5 years since our A round, and that's partly because we were actually doing what MicroStrategy has popularized, which is we had Bitcoin on the balance sheet from 2014 and accumulated Bitcoin from mining too. So effectively we got the benefit of equivalent of a round of investment from Bitcoin price appreciation. But like everybody, we prefer to hold Bitcoin and not sell it. So an investment round allows us to expand and accumulate Bitcoin rather than spend Bitcoin. So, and what's coming for us for the future? So, some of those things are public, the new miner, more financial products from the Blockstream Finance. So we're looking to reboot the Advent Capital Alpha Fund, which is targeting a low risk, medium yield Bitcoin product, and some other products from that same entity. Which would probably be both, securities through Luxembourg security vehicle and liquid tokens, potentially with exchange listings. So that's a kind of formula we're interested to repeat. And future for Bitcoin, I think, there's quite a lot going on for Bitcoin in terms of R&D. So the Taproot and Schnorr is getting activated later this year. We hope to have it active in Liquid a little bit before that. So, Andrew Polster and team have been working on integrating Taproot into Liquid for upcoming soft fork and being able to do those kind of transactions in Liquid. And I think C Lightning actually has Schnorr and Taproot support already ahead, ready for when it's activated. So there are more soft forks that people are in the Bitcoin ecosystem, the people maintaining and doing R&D, sort of applied R&D on Bitcoin, are working on some input hash things that make Lightning more efficient, and cross-input signature aggregation, which is a way to get a second benefit from Schnorr, so that you can kind of make a combined signature from multiple coins, not just from a multi-sig. So that will make things a bit more space efficient for transactions. So those things are things that people are discussing, but there are certainly many other things which are maybe a bit further out. So there's some discussion about things like drive chains, so peer-to-peer, sidechain support. In the Bitcoin protocol, it requires more opcodes or simple covenants. So there's some discussion of that as well to sort of be a bit more flexible for enable some more generality for Bitcoin smart contracting to enable some more use cases. But these things I think are still in the R&D phase. And for myself, I would like to see something like confidential transactions in Bitcoin, in some later years, and maybe some more Bitcoin layer 2s focused on privacy, maybe a different scaling technology. So I think there's room for more specialized layer 2s with different privacy and scalability trade-offs.
Oh, great. I mean, many altcoin marketers or promoters always say Bitcoin is old technology, but I would say it's quite the opposite of old technology. So Adam, thanks for that. My last question is, there's a saying that is, you can't change Bitcoin, but Bitcoin changes you. I'm not so sure of the first part in your case, because I think you influenced Bitcoin at least with Hashcash and with other ideas a lot. But how has Bitcoin changed you privately or personally, or maybe your mindset or something like that in the last 12 years?
Well, I guess I was always somebody interested in a kind of blend of technology and social, societal cause. And so that was kind of a concept for the cypherpunks, that they were interested to build and deploy privacy technology and ultimately electronic cash. So I think Bitcoin gave me, many thousands of people, or probably millions of people at this point, a mission, basically. It becomes all encompassing and uses all of your free time and work time. But it's very empowering and fun and exciting. So I think that's great. It's a reason to work very hard and try and improve this and deploy technology that helps Bitcoin adoption.
Yeah, great. Thank you very much, Adam, for this very long interview, and it's very interesting. And where can people find and follow your work?
So on Twitter, I am at Adam3US, and Blockstream and liquid related products are on blockstream.com.
Yeah, thank you very much. And I've also seen you started your own podcast. So there's also a Blockstream podcast now. So you are a media company as well.
Those are mostly to interview sort of Blockstream technical people and product leads to have a vehicle for explaining our products. We have a lot of products and a lot of R&D, and we wanted to make a format where we can explain those things to a broad audience. Some of them are otherwise only explained at technical conferences or academic conferences and things like that.
Great idea. So thank you very much, Adam, and have a good day.
Thank you.
Wow, what a great interview that has been. I mean, to be able to talk to Adam Back and to all the other builders in the Bitcoin space is quite interesting and something special. It's not every day that you have Adam Back on the show. So I hope you enjoyed it as much as I did. And please remember to subscribe to my show at anita.link/subscribe and to click the subscribe button here on YouTube. Until next week when it's time for the Anita Post Show. Bye bye.